Welcome back to Investing Talk podcast. Today, we are tackling a really fascinating and definitely volatile stock. It's undergone perhaps the most dramatic corporate transformation we've seen this year, Safety Shot. And the big question on everyone's mind, and the focus of our analysis is this: is Safety Shot a good time to buy right now? We've pulled together the latest info on the company's, traditional fundamentals, its technical picture, and crucially, this unprecedented strategic pivot that has just fundamentally redefined the whole business model. And hey, if you find this analysis helpful, please do hit that subscribe button, give us a like, maybe leave a comment below. Also, if there's a company you want us to explore next, definitely drop the name in the comments. We do look at those.
Okay, let's jump in. So we're looking at a company historically known for some pretty niche wellness products, mainly that unique beverage designed to lower blood alcohol content. But the recent news, it confirms this company is just not a consumer beverage company anymore. It's really something entirely new.
Yeah, what's truly noteworthy here isn't just a change itself, but the sheer velocity and the magnitude of the strategic shift Safety Shot has kicked off. It fundamentally alters how you have to assess its risk and its potential. We're looking at a kind of hybrid entity now, part consumer health and beverage distribution, the old stuff, and part decentralized finance treasury operation. This dual nature, that's what makes the opportunity and, frankly, the risk so complex.
Okay, right. Let's try and unpack this unusual merger of worlds then, because on one hand, you've got the traditional business metrics, things we usually look at, and on the other, this super aggressive new digital asset strategy. So let's start with that traditional foundation. What does the fundamental analysis actually tell us about the core business? And I guess how much weight should we still give those figures now?
Well, the fundamentals present a pretty classic high-growth, high-risk profile. The growth figures themselves are undeniably impressive. The company achieved really significant revenue growth back in 2024. We're talking a massive 246.36% increase, reaching about $701,967. And crucially, they anticipate the recent acquisition of Yerbay will turbocharge this growth. They're projecting a potential tenfold revenue boost over those 2024 results. Now, that is the kind of aggressive forecast that definitely grabs investors' attention.
Yeah, a tenfold boost. Okay, yeah, that's huge.
It is. However, we absolutely cannot ignore the major headwinds. The company still carries negative net income. Now, that's pretty typical for aggressive growth stories, sure, but it's still a drain on resources. And maybe more concerningly, at least for traditional investors, is that verified detailed metrics on things like debt levels or, importantly, free cash flow. They're just not readily available from the source material we looked at. It's still a medium-sized market cap company, around $51.43 million, and it relies very heavily on niche specialization, things like its alcohol reduction drink and unique hair loss treatment products. That's its competitive edge, historically.
Okay, so the foundation shows some promising top-line growth, mostly driven by acquisitions and these niche products, but it sounds like it's deeply troubled by some financial black holes, negative income, uncleared debt. That doesn't exactly sound like a stable setup for a massive expansion, does it?
Exactly right. And the lack of clarity on free cash flow, that is probably the biggest traditional red flag here. It forces us to ask, how is a company facing these ongoing sort of structural financial challenges actually funding a massive $30 million strategic shift? Where's the money coming from?
That question leads us directly into the heart of this whole discussion, doesn't it? The transformational pivot into the digital asset space. The source material describes Safety Shot entering an entirely transformational phase. So can you lay out the timeline for us? What exactly happened in just the last 3 months that drove this really unprecedented strategic shift?
Yeah, it happened fast. The core shift really kicked off starting in July 2025. Safety Shot announced a $30 million strategic investment. But this investment wasn't standard cash, which is key. It was split. So $5 million was a registered direct cash offering. That provides immediate liquidity, presumably for the existing operations. But the other, much larger piece, $25 million, that was a private placement in BONK tokens. And it was facilitated directly by BONK founders. This means the founders of the actual crypto asset are now heavily invested in the public company itself.
Right, that distinction is critical. So they didn't just buy the tokens on the open market. They essentially traded $25 million worth of BONK, which, just for clarity for our audience, is a popular but highly volatile meme coin built on the Solana blockchain. They traded that in exchange for equity priced at, $0.46 per share?
Exactly.
That pricing gives us kind of an anchor point, I suppose, for the valuation of this new relationship?
Precisely. And the integration didn't stop there. It wasn't just a token swap. The company simultaneously acquired a 10% revenue sharing interest in BONK.fund. That's described as a decentralized platform on the Solana blockchain.
Okay.
Now, this is critical because it represents an immediate operational cash flow component coming from the crypto ecosystem, rather than just, speculative holdings. It gives the company sort of two levers in the crypto space now: a volatile treasury asset, the BONK tokens, and an operational revenue stream from BONK.fund.
And the governance structure is changing really rapidly too, right? This isn't just a financial transaction. It feels more like an operational merger between like a consumer packaged goods company and a whole decentralized ecosystem.
Absolutely. Yeah, that's a good way to put it.
Yeah.
And to really cement this union, they are actively seeking shareholder approval for 3 new directors.
Yeah.
And the aim is for BONK founding members to occupy 50% of the board seats.
50%. Wow.
Yeah. Why is this important? Well, it pretty much ensures that the digital asset strategy is permanently protected and prioritized at the board level. And furthermore, they've actually reserved the trading symbol BNKK with Nasdaq. That's for a future name change, explicitly connecting the company's public identity directly to the BONK ecosystem.
BNKK. Okay, they're not being subtle about it.
Not at all. And then in August, they took the next logical step towards treating this like a serious asset. They teamed up with Monarch Asset Management, their mandate, to actively manage the BONK holdings. The goal is achieving self-sustaining treasury operations and, crucially, yield generation. This is where that term decentralized finance treasury really comes in. They are actively looking to generate returns from that $25 million position, not just sit on it.
Huh. It's a fascinating, if maybe incredibly risky analogy. It's like, imagine a traditional soda company suddenly deciding to put, 50% of its treasury into gold bars. But these gold bars are digital and they move like 40% in price every single day. That's the kind of complexity and volatility traditional investors are now suddenly exposed to with this stock.
That's a pretty good analogy, actually.
Yeah.
Captures the volatility well.
But this raises a really crucial question, especially for investors who maybe bought the stock based on the original vision. What happens to the core wellness business amid all this shift? Are they just abandoning their original identity entirely, or is the beverage business simply an afterthought now?
Well, publicly, they are maintaining it. They're emphasizing its continued development. So, alongside the digital pivot, the company says it's still developing new nootropic and sleep solutions, using its core wellness expertise and proprietary formulations. They also seem focused on leveraging that Yerba acquisition to expand national distribution for the beverages.
Okay, so they say they're doing both.
Right.
Yeah.
However, there's a corporate action element that does introduce some uncertainty. That's the postponement of the record date for the planned spinoff and distribution of shares of Caring Brands. Now, investors are monitoring this delay pretty closely because in an already complex environment like this, delays in executing planned corporate actions, well, sometimes they can signal internal difficulties or maybe shifts in financial priorities. It just adds another layer of execution risk to the whole mix.
Right, another thing to watch. Okay, let's shift to the stock price action itself. This transformation seems to be fueling a massive roller coaster ride, just looking at the chart. What does the technical analysis say about the stock right now? Is this momentum sustainable, or is it just purely speculative froth?
The defining characteristic right now is definitely extreme volatility. The stock has a really high daily average volatility, about 39.25%. So for you, the listener, that means price swings of nearly 40% are pretty common throughout the day. This is absolutely not for the faint of heart. We saw a very sharp recent spike, 31.74% just on October 3rd, 2025 alone. That really illustrates how responsive the stock is to market news, whether it's real or just rumored.
Wow, 39% daily average. Okay.
Technically, though, the momentum indicators are positive right now. The stock is actually registering buy signals from both short-term and long-term moving averages. So that indicates the upward trend. While it's definitely volatile, it does have some technical backing. However, the Relative Strength Index, the RSI, which measures the speed and change of price movements, it's sitting right in the middle, around 48.25. This suggests more of a neutral position, so it's avoiding that really overheated, overbought territory that usually comes before a major correction.
Okay, that neutral RSI is maybe a slightly encouraging sign then. Suggests the recent gains haven't completely burned out all the buying pressure yet. What are the key floor prices, the support levels we need to monitor if selling pressure does return?
Yeah, given this volatility, defining support is crucial. The key support levels to watch seem to be around 0.688 cents. And then, if the market significantly challenges the valuation, maybe down to 0.4068 tenths, those previous levels look like critical psychological and technical floors.
0.688 and 0.406 cents.
Got it. So, okay, we have mixed fundamentals. technically positive momentum right now, but just extremely high volatility. What about the general market sentiment? Outside of the immediate technical data, what's the vibe?
The general market sentiment seems pretty neutral, actually. It's reflected by a fairly low fear and greed index, or FGI, of 39. For those maybe unfamiliar, the FGI measures whether the broader market is getting too greedy, which might imply a correction is near, or too fearful, suggesting a possible buying opportunity. A score of 39 is, slightly fearful, but generally neutral territory.
Interesting.
Yeah, and this neutral sentiment is particularly interesting because despite a pretty distinct lack of specific positive news like earnings beats or analyst upgrades, the typical drivers, right? Despite that lack of news, the stock has recently seen 4 consecutive days of price increases. This strongly suggests that the internal momentum and the whole narrative surrounding the corporate strategy, the BONK pivot, that's what's driving the action right now, rather than some external financial validation. Okay, narrative-driven momentum. Let's look forward then. What are the upcoming, verifiable events that could drastically affect the stock price in the near term? Things people can put on their calendar.
Right. The most critical short-term catalyst is definitely the Q3 earnings release that's scheduled for November 13th, 2025. Investors will be scrutinizing that report intensely. They'll want to see the first financial impact of the Yerbay acquisition, and probably most importantly, the initial reporting structure and performance metrics of this new digital asset treasury. How are they actually accounting for this?
Yeah, that first look will be key.
Definitely. Other near-term corporate governance catalysts include that shareholder vote on the new directors, which is scheduled for October. That'll really solidify the strategic shift if it passes. Looking slightly further out, the holiday sales report in December. That'll be the first major test of consumer demand for the expanded beverage portfolio. Post-acquisition, did Yerbay help? And then maybe in January 2026, things like ETF rebalancing and institutional activity could introduce more volatility, particularly as the company's profile changes, maybe with that potential ticker change to BNKK.
Okay, plenty to watch. What about the speculative buzz? Beyond the verifiable dates, is there any chatter out there that could influence price action, especially given how sensitive this stock seems to be to narrative?
Oh yeah, the new crypto strategy has definitely created significant high-stakes speculation. The main rumor circulating is that Safety Shot could become the dominant public equity proxy for the BONK token, and maybe even the entire Solana ecosystem.
A proxy play for Solana.
Kind of, yeah. The idea is that traditional institutional investors who are maybe barred from holding crypto directly, they might flock to this stock as the closest legally compliant way to get exposure to that whole ecosystem.
Interesting angle. What else?
There's also some unconfirmed talk about a major beverage partnership, maybe with national distributors or big retailers, to dramatically accelerate the rollout of their wellness drinks. Now, that would validate the fundamental side of the business, the beverage part.
Right, proof the old business still matters.
Exactly. And lastly, and perhaps the most unique speculative driver, is just the possibility of a major rally, like a crypto treasury windfall in the BONK token price itself. If BONK goes on a tear, it could materially boost the company's balance sheet and maybe operating cash flow, acting as this really powerful non-traditional hedge against traditional business risks, like, say, poor beverage distribution.
So the crypto holding itself becomes a buffer.
Right.
That's unique. Okay, so what does this all mean for you, the listener, who might be considering this stock? We have this uniquely complex situation, a company undergoing a really bold transformation with aggressive growth potential, but also equally high execution risk, negative income currently, and just off-the-charts volatility.
Well, the overall assessment provided by the sources we reviewed actually gives Safety Shot a bullish rating, a 7 out of 10.
Wait, hang on. A 7 out of 10. Seriously. Given the severe lack of verified cash flow metrics you mentioned, the existing negative income, the enormous regulatory and volatility complexity of blending a physical business with a volatile crypto treasury, isn't that rating, I don't know, kind of irresponsible? Or are we missing some core stabilizing factor that somehow justifies that level of bullishness?
No, it's definitely aggressive, I agree. And it absolutely forces you to adopt a unique perspective to even get there. The rationale for that 7-10 rating seems to center entirely on the high-risk, high-reward profile created by the pivot. So the bullish outlook is driven by the immediate aggressive growth potential from the Yerbay acquisition, sure, but also the positive technical momentum we discussed and this absolute unique market position they're trying to carve out.
Okay, but what's the stabilizing factor then? Is there one?
Well, the core stabilizing factor, maybe paradoxically, is the BONK ecosystem itself, or at least the potential tied to it. See, if the company successfully leverages that $25 million treasury and the BONK.fund revenue stream, they might have actually carved out an entirely new niche. They could become the publicly traded gateway, essentially, to the Solana meme coin ecosystem. And that could potentially attract capital that traditional beverage companies could never dream of accessing. So for investors specifically seeking asymmetric risk, big potential upside even with big downside, the upside created by this unique niche maybe fundamentally outweighs the known risks of the legacy beverage business in their view.
Ah, okay. That synthesis clarifies the target audience much better. It really means the best investment horizon is defined by two very specific and probably risk-tolerant investor profiles.
Precisely. First, you've got the short-term traders. They're looking for those volatile gains, driven by near-term catalysts like earnings reports or big swings in the BONK price itself, pure momentum plays. And second, maybe some longer-term investors who are specifically seeking exponential growth derived from carving out this very unique niche market right at the intersection of consumer health and decentralized finance. These are investors who are fundamentally buying into the digital asset strategy first, with the beverage side maybe as a secondary factor.
Got it. That makes more sense in context of the rating. Okay, well, that was a very detailed analysis of Safety Shot. We covered the fundamental growth challenges, the technical volatility, and this absolutely critical integration into the digital asset space and the whole BONK ecosystem.
And just remember, this analysis is purely for educational purposes. It should never be considered investment advice. The complexity here and the really high volatility, they absolutely mandate serious due diligence on your part and a high tolerance for execution risk. You really must monitor how effectively they actually manage to integrate these two wildly different business segments going forward.
Absolutely critical point. We hope this analysis gave you the crucial nuggets of knowledge you needed to start assessing this very unique and rapidly evolving opportunity. And here's maybe a final thought for you to chew on. If Safety Shot somehow successfully pulls off this unprecedented integration, balancing a physical consumer product line with a massive, volatile digital asset treasury, how might that actually redefine what a growth stock even looks like in today's market? Something to think about as you consider this company. Thanks for tuning in to Investing Talk Podcast. We'll catch you next time.